Well, hello everybody, and welcome back to Midas Letter Live. Edward Molesky, my co-host, is joining us once again. And Edward, why are we back? After a 2-year hiatus, why are we back? Riddle me this.
We got nothing else to do?
That's quite possible. No, actually, the reason we're back is because there is a bull market shaping up in precious metals, which means there's a hell of an opportunity for investors in the venture sector in Canada, in the United States, in the UK, in Europe. Basically, anybody who's got any money left after that cannabis market, we're here to help you make some back. At least that's the theory, eh?
We're going to scoop it up and shovel it somewhere.
We're going to put wheelbarrow loads of it in the bank. But no.
What a day, though, to do a show.
What a day. Because if you look at the gold action this week, we're seeing all-time record highs set in the gold price right here. If we look at silver, look at that jump in silver earlier this week, up just about $33. This is what starts happening as the gold and silver prices get up more momentum, is the number of ounces of silver it takes to buy 1 ounce of gold narrows.
Yes.
And so if you listen to guys like Eric Sprott, they're going to tell you that the bigger opportunity is in silver. And who's going to argue with Eric Sprott?
Well, you know, I remember gold taking off in the late 70s. And silver, the bunker hunt, cornered the Hunt brothers cornered the market in silver. And silver went to $50. And people, like my mother, she sold her silver, her cutlery set, her silverware.
She sold the silverware?
We were eating with our hands.
Boy, that sounds like a desperate act.
Go out there and buy something to replace it.
So was she selling the silverware because silver was at $50 an ounce? So silver was at $50 an ounce back in the 70s?
In 79, it took off, yeah.
No kidding. And the Hunt brothers, as I recall, they started buying silver futures and physical silver, and they're thinking that they're going to corner. But didn't they ultimately fail? Because they got called on a margin call, and that's what unwound the whole thing.
All I remember, they asked Bunker Hunt in a Senate hearing what his net worth was. And this is what he said to the senator. Senator, only two people know that, God and me. God ain't telling, neither am I. that happened. That happened. I won't swear on it. But anyway, they're very interesting guys. I mean, they're going to say, you know what, we're going to do what we want because they're at the time, worth a few $100 million.
Yeah. So this is the thing: is that we're in this market where silver and gold are moving up, but not just silver and gold. Look at copper. This is the price at which mine-building decisions are made. Can't tell you how many copper CEOs I listen to who say, I need to see $4.50 silver, copper before we can build a mine. Yeah.
And now they say it, they go, well, now I want $4.60.
Yeah. Also, they need to see $4.50 copper for more than a couple of days before mines start to get built.
Yes. Yeah. There it is.
But anyways, this is highly sort of predictive. It's a harbinger of things to come. I think one of the reasons that the copper price is so high, I mean, besides the geopolitical unrest that always drives interest to real assets like metals and usually real estate, the monetary uncertainty that manifests when currencies are perceived to be becoming hyperinflationary as a result of excessive government borrowing. But also, the price of copper over the last few years has not been anywhere near this range. And so it's only the low-cost, high-volume copper producers who are making any money.
Yeah, well, it spiked up to 5 quickly and then pulled back to the 4 or 3 inch. No, but it's digesting that initial monumental move. And now we're starting to see. I think we get through 5 on copper.
Yeah,
they could go to 7 or 8 or 9.
Right, and the reality is that the supply side is not going to respond to the higher copper price until the prices are consistently higher.
And it takes 20 years to put a mine in now. Or, okay, not 20, maybe
20 might be a little
18 years. Now they say you want to tip me 20%. No, I say 18.
Yes.
See, everybody's on a budget.
Everybody's on a budget. There are big things happening geopolitically, and this week we heard from China. So China basically fired the large stimulus cannon in such a conclusive way. Interest rates cut by 50 basis points to 1.5%. They reduced the bank reserve requirements. It's not clear exactly what that number is, and whether it's going to be accurate or not in the media, we don't know. But they've reduced they've reduced the deposit needed to buy a second home from 25% to 15%. And yes, interest rate cuts are by nature inflationary for prices. But people fail to grasp, I think, that there are always two inflationary traps. There's monetary inflation,
yes,
where governments increase the money supply to stimulate the economy,
yes,
which drives price inflation, where there's more money chasing a finite production level of commodities and products,
right,
which creates competition, which drives prices higher. So, yes, absolutely, cutting interest rates is inflationary.
There must be something going on. I mean,
we know that China's real estate and debt issues have been coming to a head. We saw China Evergrande go absolutely sideways, and essentially, but in China, instead of the media chasing these stories where these big financial institutions are crashing and burning, there it's just like they quietly disappear. The CEO and the CFO disappear, never to be seen again.
Yeah.
A new CEO comes in and announces austerity measures, and the company gets bailed out by the federal government.
Have you been to China a lot?
I've never been to China. I can't go to China. You know why? Because I wrote so extensively against the corruption of the former Chinese premier's family,
right,
and how they were exporting all of this wealth out of China, that it was suggested to me that I probably shouldn't go there, because that was back in the Midas Letter 2.0 days,
right,
where we had a global audience following us because of our comments about mining and gold. And this is why Midas Letter 3.0 is here, people. Never mind cannabis, never mind lithium, never mind all these things. It's a gold and silver market. Pound the table. Get out your dust off your trading.
We're not talking fake fool's gold here. We're talking real gold.
Well, so on the off chance that you're sub 40 and have never experienced a gold bull market before, and let's see, when was the big gold bull run?
You could argue 203 to
2002 was when gold started rocking up from $300 and went all the way to a peak of $1,500 in 2014. Is what
the details. I mean, anybody can punch it up.
There was basically,
this isn't an exam.
This was a 500% increase in the price of gold over a period of about 12 to 15 years, and there was a pause. Gold actually bottomed out at $1,050 in 2016, and that's when there was no interest in gold. And now here it is. Yeah. Here it is, a mere 5 years, 6 years, 7 years later, and gold has blown through 2,000 and now through 2,500. And the next stop is easily $3,000 and possibly $5,000 in the near term. And that's what.
There's still guys out there, serious money guys, that are calling for $10,000 gold to match the Dow price.
Right. And this is why we're relaunching the Midas Letter, is because this is the point where there's an opportunity, where gold has been out of favor for so long.
Right.
There are so many gold projects, worthwhile gold projects, underexplored, that could become mines, that are sitting out there for pennies on the dollar because the interest isn't there yet. And it takes a while for that gold price to filter back into the junior capital markets, which have also been beaten up by naked short selling, by the persistent predatory nature of the promotional and the banker layer, taking big share blocks for pennies on the dollar and then blowing them out to the retail side for an exponential number. Those are things that are going to be addressed in this next cycle, and we are basically pointing to this and saying this is the beginning of the hyperinflationary cycle of the G7 monetary system, catalyzing the conflicts that we're seeing around the world, as well as the fear inherent in the rising gold price.
When you say catalyzing, you don't mean like cattle futures.
No, we'll talk about futures. Right. We'll talk about futures.
It's also been pointed out by many writers that we follow that the TSX venture companies, that marginal layer of mining companies that are explorers, et cetera, et cetera. There's an opportunity in front of us.
Yes.
With gold going like it is, you can pick up some of these, and I'm not naming anything specific, but there are companies that are trading for 2-3 cents a share.
More importantly, is they're trading for $2 or $3 per ounce of gold and silver in the ground.
That's right.
So
that's right. There's value there.
Yes, and the point here is the reason to launch a newsletter in this time, in this type of a cycle, is because, as usual, 9/10 of the companies are going to be, as Rick Rule says, garbage.
Yeah, but there's going to be
1 out of 10 that are going to make.
We'll find more than 1 out of 10.
I don't know if we're going to find more than 1 out of 10.
I know what you're going to say.
But we will find the 1 out of 100 in the mining sector that are better than average chance that they're going to be mined.
Yeah.
But here's the other important thing to remember is that these companies, you don't want to buy a gold stock necessarily, unless you're Eric Sprott, and hold the stock until it's a mine and it's returning the investment on equity that it put into the exploration. A gold stock can be purchased for a shorter term, call it a swing trade, call it a day trade in a hot market, but a trade can be several months duration in a moving gold price environment. And the trick to buying stocks that are going to move quickly, appreciate quickly, is finding those stocks with the capital structures that will allow that to happen. When I say capital structure, what am I talking about? I'm talking about a company that has 500 million shares outstanding, in which 200 million were sold during the gold week period for pennies per share. That stock is going to come back into the market as the gold price rises and takes prices higher. And all of those investors, so that's a larger proportion of the shares for a lower amount of money, are going to come back into the market. So it's going to be harder for that stock to move higher than a company with 40 million shares outstanding, where the shares were all purchased at an incrementally higher level.
I know, but maybe one of the reasons why this market's been so shitty is because every one of them's got 400 million shares outstanding.
Well,
it's like, I'm just saying.
Crypto, Edwin. What about crypto?
Did you think that it would stay up as long as it did?
Crypto always astounds me.
And just the name. It's cryptic. So how could you understand something that's cryptic?
Well, this is the thing. There are so many young people, especially, who walk around pretending exactly how it works, and it's like, okay, you can describe the architecture of the platform to me in software programming terms. Fine, I can follow that, and you can describe to me the limiting factor of the fact that the entire Bitcoin issuance is going to be limited to, I think it's 21 million coins. And you can tell me how the anti-inflationary nature of Bitcoin exists in the fact that it was already halved. But I counter that with okay, but what about the fact that there are over 2,000 cryptocurrencies? So as a currency sector, you can say that Bitcoin might have all these anti-inflationary measures built in, but the sector itself, digital currencies, there are 2,000 flavors of digital currency now. And, okay, so obviously Bitcoin is 85% of that entire market capitalization. Fine.
I think the whole thing's still only capped at about $1.5 trillion.
What is not really part of the argument I hear from the young crypto enthusiasts is that they seem to me to refuse to acknowledge the political significance of the monetary supply being part of the government. And so if you think that the government's, basically the geopolitical power structure is going to permit the usurpation of the currencies by a digital currency over which they have no control, there's the fundamental flaw in crypto.
That gives me another reason to think that we may be close to a financial Armageddon. Like, I hate to even say that because it conjures up all kinds of terrible things like anarchy and
drive-by shootings,
carjackings,
shoplifting. Wait.
Well, isn't that going on now? I don't know, but we saw. You got to admit, it's like, holy smokes! You don't want to, not read the news for a couple of days because you're going to miss too much. Like, there's lots of shit going on.
Yeah. Have you ever been to a freak off?
I've read about them.
You've never been to a freak
No,
off. Come on, Ed.
No.
Have you got any baby oil tucked away in your car?
Yeah.
Yeah. See?
For the
I
ride
knew.
home. For the ride home.
For the ride home. What are you on autopilot? We're blessed with this this opportunity as content producers. You know, sometimes it's a struggle to find something worthwhile to talk about, but currently we're living in an embarrassment of topical richness when it comes to
Embarrassment. That's a great way to put it.
like if you look at what's going on in the celebrity world right now, with at the apex of that pyramid is Sean Combs, aka Puff Daddy, aka Puff Diddler, aka P Diddy. And now you've got all these other voices out there peripheral to that, and they're suggesting that, well, actually, he's not the head of the snake. He's actually one level removed from the apex of the pyramid, and they're saying all kinds of crazy things like Jay-Z
oh my goodness,
is the ringleader.
Well, they're dragging in Oprah now.
Oprah, Lufa. Oprah. Well, that's amazing. I mean, Oprah's been under a lot of credibility strain lately since her comments and her sort of insensitive attempts to raise money for the people of Lanai, Hawaii after the fire. Remember how she had that program with The Rock where she was like, we're going to raise $125 million. You guys put in the money. I'm not putting in any money. You guys put in the money. Remember that? And that sort of catalyzed a shift in the perceived sort of love for Oprah, the public love for Oprah. And it's funny to me, so we're seeing how P. Diddy's situation, and essentially catalyzed by the lawsuit of his former partner who wanted $50 million out of him or something. I've heard 50,000, I've heard 50 million. He turned her down, and that caused the case to go to court, and that got the attention of the FBI when the plaintiff won the judgment against P. Diddy for these, what amounted to involuntary confinement, let's call it, and all these other charges. And that's how these stories about these freak-offs came out. And then it comes out that P. Diddy has been recording all of this.
No.
Yeah.
Like President Nixon.
Well, what kind of
I know. You know what? People want to record their greatness and in their minds what they perceive makes them great for posterity. Like there's a sickness involved here, and it's called your ego.
Right.
Can your ego ever be placated to the point where you've had enough?
Right. Well, but we're in this situation where we have, you have basically the house of cards, the celebrity aura.
This could get really incriminating, couldn't it? Like,
well, I mean, but it's already removed the aura of, these people are something special.
Just because you have money doesn't mean you're smart.
Well, the corrupting factor is the extreme wealth. And extreme wealth gives any individual who possesses it the ability to explore, in actuality, their wildest sexual deviancy, which I would say it's safe to say that everybody has the potential for extreme sexual deviancy because we're all animals. We are just animals, correct? And if you look at the monkeys in the zoo, you want to see sexual deviancy, unprosecuted sexual assault. I mean, it happens all the time in nature.
Yeah, I've been going to the zoo lately.
Yes, well,
a lot. Things seldom are what they appear to be, James. You know it, and I know it. I mean, and you and I are no longer spring. Well, I'm still you're a spring chicken. I'm not a spring chicken.
As long as I'm sitting next to you, I'll always be a spring chicken.
You will. I'm a November chicken.
How do we convince ourselves that we are the foremost evolved species on the planet when we cannot help but act as animals and worse than animals by using our sophisticated command of technology to obliterate each other and our planet? That's the thing.
They jimmied up the papers.
Jimmy?
Well, sorry.
Jimmied? Jimmied? I had nothing to do with that. No, well, case in point.
What have you been doing at night?
Anyways, the world has definitely taken on a darker turn since Midas Letter 2.0. Put it that way, right? And Midas Letter 3.0 is going to bring salvation and light to all.
Yeah. But you should see, like we're sitting here, and gold is definitely. It'll be interesting to see where gold is in a couple of years. I think it could be 10, 15, 20,000 bucks.
Yes.
Maybe not 2 years, maybe 3 or 4, but it's going to get crazier and crazier. It never gets less crazy unless there's a wipeout. Once a wipeout takes place, like 29.
Capitulation. So capitulation is an interesting word. The prevalence of naked short selling in venture markets. And I'm not talking just Canada. I'm talking about all markets that has a venture sector. So I'm going to talk about the TSX Venture in Canada.
I know that chart. I watch it just about every day.
And this is the line you want to be looking at that tells you that things have changed. So if you look at
There's
this,
definitely a line right there, James.
this line here you're saying
Yeah.
indicates that the trend in which we see lower highs and lower lows has ended.
Yes.
So the higher lows thing has started.
Yeah. This is suggesting that things are changing right in front of us.
All right.
And if this index gets over 600 and starts heading north, which it looks like it's going to start to do, we could have some action in the venture, which is...
Yeah. And this change has been catalyzed by a capitulation in the short interests, arguably, or the lack of buying interest, depending on what the actual impetus is. And it's starting to indicate accumulating buying interest, right?
Yeah.
So this is why September saw the look at this is the day the first Midas Letter 3.0 came out, September 1st. Basically right at the bottom. And now we're in this new trend. And this trend, this is representative of the junior companies in the resource exploration sector, because that's 95%, 90% of the TSX Venture Composite. And this is what we're following, and this is our representative for the idea of capitulation. The capitulation has happened in the short interest or the lack of buying interest. It's over. The price of gold, the price of silver, the price of copper has all generated sufficient interest to the long side that the trend has reversed. So we're going to leave it at that for this week.
Leave it at that. And listen, this is a learning experience.
And we'll be back next Saturday with another show. So thanks for joining us, everybody. Woohoo!